So, buddy, this is the two pictures you've sent me. I've got them in front of me. So I'm just on the 30-minute chart right now. That's why this one looks a bit weird. But once I go to the 50-minute, you will see that it looks exactly what you have in your chart, what the picture you sent me. So the first thing I want to just talk about is just what I said in the voice note, that each pair does have its own retracements. It can be deep. It doesn't have to be deep. All pullbacks are not the same, and also depending on the time frame as well, and areas of the market where price is going towards, because you do have areas in the market that is pulling price towards it, such as equal lows and equal highs. They pull price towards them, and they are normally targets in the market. And the other reason also is that if you have a lot of selling pressure or buying pressure in the market, most likely price will also, with that same pressure, it will head towards certain areas of liquidity, like old highs and old lows, that where liquidity also rests, that it is most likely going to target. And from once it sweeps liquidity, then price will normally do something which is called rebalancing itself inside of a value gap. Sometimes so price does this, it sweeps liquidity, then it goes into areas of inefficient price action, and then it rebalances itself, and then afterwards it seeks more liquidity. So what price will do, it will intend to go to areas where price will sweep, or an area pool of liquidity or noticeable liquidity that price will most likely sweep first. So sometimes price will head towards that based off a higher time frame. So on a lower time frame, you won't have a valid trading range that forms yet, because price is seeking one thing, and that's going to sweep that liquidity. So we will look at why one trading range failed, or why you want to know why some trading ranges failed. So we'll be looking here why this range didn't create a proper pullback, and why we have a pullback here, and all of that. So first we're going to look at a 15-minute example or picture that you've sent me. So the first thing I want you to look at always when you see setups on a lower time frame is you should pay attention to a high time frame as well, because higher time frames trump lower time frames all the time. So sometimes the overall move is based on a high time frame, and then sometimes on a lower time frame, price will just start to move away. And when you don't know why, then it's sometimes just looking at a higher time frame. So let's go to the 15-minute and let's have a look at this. So this is what you've sent me, and before I actually say anything, I also want to go to a higher time frame. So the high time frame that you can use is, you can use this 4-hour supply, 4-hour demand level right here, and you can use this as your support level where price is moving away from, or you can use the daily time frame. I tend to use a daily time frame or a weekly time frame, depending on what pair, depending if it's forex or indices or metals, crypto. So but in this case, for metals, I tend to use the daily time frame. But we are in a daily POI, so this is our daily order block that we're going to look at. So inside of my daily order block, we are going to see what price does. Daily order block. So that's my daily order block. And most importantly, the reason why price pulled into this daily order block is because we have this liquidity right here resting above it. So this is relatively equal lows, and they are a magnet for price to pull towards. So that is why price pulled into that area, which is the order block, because above the order block lies a area which makes price draw towards it. So let's just it's liquidity that was grabbed, or we can just make it equal lows for now, so that you know. So that's my equal lows and my daily order block. Also, the reason why there's more sales coming in this week, I believe I'm anticipating more sells is because we've got this weekly buy side liquidity, buy side imbalance. Oh, my mind is so focused on liquidity right now, but you should look at understanding liquidity, bro, because it's a great concept to get to know and understand. So this weekly low right here is also liquidity, an area where price can seek as well, because we want price to rebalance inside of this one weekly buy side imbalance, sell side efficiency, so that we can move higher, just like it did over here. So if you look on the weekly time frame, you will see price making use of these areas to push higher. So if you go back here, you'll see again, just showing you some history. Price pulled into this busy again and then moved away. So my understanding right now on gold is that price will pull into an area of inefficiency, but as it's doing this, it will also sweep weekly lows like this. So I'm anticipating more sales coming in so that we can take this weekly low right here and also rebalance and mitigate this unmitigated weekly buy side imbalance. So I'm looking at sales all the way. So let's just go back to the daily. So I marked up my daily time frame, POI, and we swept important liquidity. But what I'm also gonna mark out is this bottom of this candle, and also this area right here, because we will find in this week down here we swept areas on a lower time frame that was also noticeable liquidity. That's why sometimes that is why we probably didn't create the trading range that you're looking for on the 30 minutes, is because if you look at this 4 hour, this candle is large, and we had all of this selling pressure wanting to take price lower so that we can sweep this low, which was the daily candle as well, and also sweep below this low right here. So that is why this 30-minute trading range did not occur or play out or give you a valid trading range, is because on the 4 hour we had so much selling pressure, and with that selling pressure we were heading towards areas of noticeable liquidity, such as these equal lows, relatively equal lows right here. So that's just internal liquidity in the form of equal lows, which is a magnet for price to go towards. So if you can master liquidity, you can anticipate where price can go next, so that's something I'm looking at and trying to do. So as you can see that we most likely will be mitigating this 4 hour order block, and then I want to see sells inside of this area as well. So I'm looking at sells on gold today. If I'm wrong, I'm wrong, but I'm just looking at price taking out this low right here, which is also kind of relatively equal lows as well. So the reason why this 30-minute trading range didn't happen is because that we were waiting towards this area of liquidity, and also right here, this liquidity right here below this low, we were heading towards that before we could have a proper retracement. So let's go to the 30 minutes. So if we look and go left to see, because I think you were expecting price to move up and mitigate somewhere this 30-minute SIBI right here, but if we go to the left and see, so we've got like this low right here. I just have to make sure that I'm marking the right stuff. No, I'm not even marking the right stuff. So we've had this relatively, as you can see, you can actually see it quite a bit more now. It's relatively equal lows right here on the 30-minute that we were heading towards. That is why we didn't have a range right here, a proper range, is because we had so much selling pressure that we wanted to sweep, that we needed to sweep, not wanted to, we needed to sweep these areas down here before we could have proper retracements. So if you look at this line, this one here, this is a daily candles low. So below the daily candles low is also liquidity. So you need to go and do some research on liquidity and what it is, and because it's everywhere in the markets, you know. And so we could not complete or form a current trading range here because we had so much selling pressure that we needed to take out the liquidity that was resting below the daily low, or resting below the daily low, which is this black line right here. That's why once we swept it, so as you can see, once we swept come on, once we how many times I'm gonna say it, once we swept that daily low right here, which is this black line, we then have a valid trading range. As you can see, then we created a valid trading range with this blue candle being the swing high, because next to that we have two adjacent candles where the middle candle's wick is longer than the both of them. That's my valid swing high, and my valid swing point is with my middle candle having the longest wick between the two candles that's adjacent to it. So that was my valid trading range, and you can actually put your Fibonacci over this range. And as you can see, we had quite a deep retracement at 71%, and if we go to the 15 minute, we will have a different story right here. So we go to the 15 minutes. So the 30 minute, this wasn't a valid trading range because of the liquidity we needed to sweep, and also the selling pressure that was behind price sweeping that liquidity. So now we will go to the 15 minute and we'll look at this, have a look at this. So same thing, we needed to sweep liquidity, which was this daily low right here. Sorry, that's not a daily low. Let me go back to the daily to make sure, because I know one of them is okay. They both are two daily lows. Okay, so the week, let's put it on the week, and let's put this on the week. So those are on the week right now. So we go back to 50 minutes. So before we continue, we had a retracement inside of this range, and this was my new range. So you always want price to create one move. So I don't want to use this as my swing high and this as my swing low, because you want price to create one move. So one move with the retracement, one move, and then we broke above this lower high. So this will be my retracement, and that will be my current trading range, and my fibs up here. So as you can see, at least 50% of this range inside of this 50-minute sell side imbalance. That's why we went lower. So that created my lower high. So this is my lower high. So this was my lower high, and we created a lower low inside of it. Just bear in mind that we are still inside of the daily time frame order block, bullish order block. So once we created this trend, as you can see, we have a lower high, a lower low, a lower high, a lower low. We created this higher high. So once we created this higher high, we are no longer bearish, we are bullish now. So the new trading range becomes this trading range right here. So my swing point down here is made out of these three candles, and my swing point up here is made out of these three candles. So this black one right here, this blue one, and this black one. So that's my valid trading range right there, and that is valid because we broke and closed above this recent lower high, giving us a new structure to look at, which will be bullish. So once you have a trading range inside, once you have a trading range on your chart and it's a valid trading range, then you can use your Fibonacci, and then you can look and find areas inside of your discount level for buy. So there is a couple of entries here you can use. You can use AMD. So this is my consolidation right here. Mark this out as my consolidation. And then this will be my manipulation. And then this will be my distribution. So all of this basically, but I'm gonna just leave it up here because price swept all of this internal liquidity that was left and created as price was creating bearish price action. So that's AMD that you could have traded off, and inside AMD your POI that you would have entered off of would have been this 15-minute buy side imbalance. So that would have been one entry that you could have used inside there using AMD. So let me remove this. The next entry that you could have used is a balanced price range. So a balanced price range is one of the strongest and most powerful entries that you can use. So balanced price range is just a fair value gap overlap with a inverse fair value gap, and inside of that is called a balanced price range, and you can enter inside of it whether you are selling or buying, and it's one of the strongest entries that you can find. So that's another entry that you could have had. And the last entry that you could make use of is just the buy model. So the buy model, so this is the buy model right here. Wait, Diddy. So this is my buy model, and my buy model is simply just called accumulation. So this is basically just my buy model. You have a area that was swept, which is this area right here. This low was swept. Then you have a market structure shift, and we had a market structure shift up here, and then we have the retracement. We had a quite deep one, and also in that market structure shift, price will give you an area to enter off of, and that was our 50-minute buy side imbalance. You could have entered inside, put your stop loss below this low, or you could have made use of the balanced price range, which was overlapping fair value gaps. And then also you could have made use of the order block right here, which is this one, this 50-minute order block. So those were some entry points that you could have taken when you were inside of this daily point of interest. This is your buy model, so it's played out right here. And also, yeah, so the main reasons are why price sometimes doesn't create a valid current trading range is because there is too much selling pressure, and that selling pressure is causing price to head to certain areas of liquidity that need to be swept before it actually forms a retracement. Some pairs don't retrace that deep as others. Thirdly, not all pullbacks are the same, and also make sure that you pay attention to a higher time frame as well, because sometimes the higher time frame is pushing towards a area on that higher time frame, which is a point like on a daily, like we were pushing towards this daily POI. That's why we did not have like proper trading ranges forming on certain time frames, because we had so much pressure that was pushing us to pull into this daily order block, because we also have this equal lows right here that pulled price towards this area. So I hope that helps you, buddy. I'm gonna see if I can send you this video.